In a world rushing towards totally digital finance, how does a company like Bitcoin Depot, built on physical cash, actually thrive? Today, we're doing a deep dive into their latest financial results Q2 2025 to really unpack this surprising growth and figure out what it means for digital assets, especially for people maybe left out of traditional banking.
Yeah, it's definitely worth a look. Their earnings release, just out August 12th, has some genuinely, well, unexpected stuff in there. Shows real strength in a pretty dynamic market.
Okay, let's unpack these Q2 numbers then. They really are quite something. Revenue first, up a solid 6% year over year. That's $172.1 million.
Which is good, solid growth. But the profit story underneath that is where it gets really fascinating.
Right, now let's about that.
Well, get this, net income surge. I mean, really surged. 183% year over year. That's $12.3 million.
Wow, 183%.
Yeah, and think about it this way. They went from losing 13 cents a share in Q2 last year to actually making 16 cents a share this Q2.
Yeah.
It's a huge turnaround, not just edging into profit, but a really robust flip.
And it wasn't just net income, right? I saw gross profit was up significantly too.
Exactly. Gross profit jumped 32% to $30.9 million. And adjusted EBITDA, another key profitability metric, that was up 46%, hitting $18.5 million. So strong gains pretty much across the board.
Okay, so these are serious numbers. What's behind it? Is it just, the market lifting all boats? Or is Bitcoin Depot doing something specific, something strategic?
That's the key question, isn't it? And it really connects to what they call operational leverage. It's not just jargon. It basically means their costs aren't growing as fast as their revenue.
Efficiency gains.
Precisely. They said the growth was driven by putting more kiosks out there, more machines, and also people making slightly larger transactions on average. But crucially, and this is important, they managed costs really tightly. Total operating expenses actually declined 9% year over year.
Declined. While growing revenue.
Yep. Down to $17.0 million. That's how you get that massive jump in profitability, growing the top line while shrinking the cost base.
That's the ideal scenario for any business, really.
It absolutely is. And another piece adding to that net income surge was a $2.3 million gain on their Bitcoin holdings. It's a mark-to-market gain.
Okay, so explain that. That's not cash from running the ATMs.
Right. It's basically the increased paper value of the Bitcoin they hold for investment because the price went up. It shows up in the profit line because accounting rules say so, but it highlights that they're both a service provider and an investor in digital assets.
And speaking of holdings, their overall financial position looks much stronger too, balance sheet-wise.
Definitely. As of June 30th, they had nearly $60 million in cash and digital assets combined. That's way up from about $31 million at the end of last year.
And they're adding to their Bitcoin stash too.
They are. They picked up another 6 Bitcoin in Q2, brings their total held for investment to just over 100 BTC.
So that's stronger balance sheet, the cash, the Bitcoin holdings. That gives them options, right?
Exactly. And CEO Brandon Mintz really hammered that point about operating leverage. Think of it like this. Once you've built the infrastructure, the kiosks, each extra transaction costs very little but brings in more revenue. Most of that new revenue drops straight to the bottom line.
Makes sense. Lower marginal costs.
Right. It suggests they can become increasingly profitable as they scale up, maybe making them a bit less vulnerable to the wild crypto price swings than some other businesses in the space. Their core operation is getting leaner.
Okay, so that's Q2 wrapped up. Impressive stuff. But what about looking forward? Did they give any guidance for Q3?
They did. And connecting this to the bigger picture, their outlook for Q3 2025 seems pretty positive. They're expecting revenue to grow again, high single digits percentage-wise compared to Q3 last year.
Okay, continued growth.
Yeah.
And profitability.
Also looking strong, adjusted EBITDA is projected to be somewhere between 20% and 30% higher than the same quarter last year. So they're confident the momentum is continuing.
And they also raised some money in Q2, didn't they? About $12 million.
That's right. Through what's called an at-the-money, or ATM offering. It's a way for companies to sell new shares gradually at the current market price. Pretty efficient way to raise capital.
So what's the plan for that cash?
Well, according to their CFO, David Gray, they've got options. They could use it to buy more Bitcoin, maybe pay down some debt, or potentially look at acquiring other companies, M&A.
M&A, interesting.
Yeah, it gives them a lot of flexibility for what comes next. They can be opportunistic.
That flexibility sounds key. But thinking about those options, buying more Bitcoin, paying debt, M&A, they seem quite different. Is one path riskier or maybe offer more reward than another?
That's a really sharp point. Each path has its own profile, doesn't it? Buying more Bitcoin obviously increases their exposure to crypto prices, big upside potential, but also volatility risk.
Right.
Paying down debt is, the safer play. Reduces risk, cuts interest costs, strengthens the balance sheet right away.
Makes sense.
And M&A, well, that could turbocharge growth, let them snap up competitors and expand fast. But integrations can be tricky and costly up front. The fact they have these choices and the cash to back them up shows they're in a strong position. They're not painted into a corner.
Okay, so we've really unpacked the financials, the guidance, strong performance, but it still brings us back to that core question. How does this physical ATM business actually work so well today? Let's shift gears a bit and look at their operations.
Sounds good. Their mission is pretty clear and kind of interesting. To connect those who prefer to use cash to the broader digital financial system, essentially letting people turn physical dollars into Bitcoin.
And they've got a huge footprint doing it.
Absolutely huge. Over 8,800 kiosks as of June. That's across 47 U.S. states. Plus, they have this BDCheckout thing.
Right, tell us about that. That's
Yeah.
not the ATM itself.
No, BDCheckout lets you initiate a purchase in their app, then complete it with cash at the checkout counter of thousands of retail stores, big-name brands in 31 states. It extends their reach beyond just the standalone machines. All this together is why they claim the biggest market share in North America.
So for someone walking up to a machine or using this BD checkout, how easy is it? Talking about get Bitcoin in a minute. Is it really that fast?
It's designed to be very simple, yeah. You use their mobile app, decide how much Bitcoin you want, scan a QR code at the kiosk, feed in your cash, and boom, the Bitcoin arrives in your digital wallet pretty much straight away.
And importantly, they don't hold your crypto for you.
Crucially, no. They don't take custody. They send the Bitcoin from their own operational wallet, their hot wallet, directly to your personal wallet. You have control immediately. That's quite different from using a big online exchange where they often hold the assets on your behalf.
That seems like a big deal, especially the speed. The sources mentioned less than an hour for your first purchase versus potentially days on an online exchange. And the cash aspect, no bank account needed.
Exactly. That opens the door for people who are unbanked or underbanked or just prefer cash. It's a real bridge between the traditional cash world and the digital asset world. Financial inclusion is a big part of their story.
And who is using these services? Is it all just speculation?
Apparently not, which is quite revealing. The data they shared suggests about 2/3 of users are using Bitcoin for things like sending money remittances or buying things online, about a third for online purchases, another third sending to others. It's not just about investment.
So real-world utility is driving a lot of the volume.
It seems that way, which points to a more stable demand for their service rather than just riding the waves of Bitcoin price speculation.
What about the stores hosting these machines? What's in it for them?
Good question. For the retailers, the benefits are pretty clear. The kiosks themselves are small, only about 2 feet by 2 feet, so they don't take up much floor space.
Easy to fit in anywhere.
Right. And retailers apparently see increased customer spending and just more people coming into the store, extra foot traffic. Plus, they get predictable rent from Bitcoin Depot, and it's hands-off for them. Bitcoin Depot handles everything.
They mentioned big partnerships too, like Circle K.
Yeah, they have an exclusive deal with Circle K and other major retail agreements for the BD checkout service. It shows retailers see real value in having these services available. It's a win-win setup.
Okay, now here's where this strategy gets really interesting, I think, beyond just adding machines one by one. The CEO mentioned something quite striking,
What was that?
that almost a third of their active machines, 300 of them, were installed in just the last year. That's incredibly rapid recent growth.
Wow, yeah, that shows really aggressive expansion. And they also mentioned having 1,700 kiosks already in inventory ready to go.
So they can keep expanding quickly without needing to buy new machines right away.
Exactly. That inventory is a strategic asset for future rollouts. And they're not just growing organically, they're buying up competitors too, like that acquisition of Telecoin in Louisiana.
Part of a plan to consolidate the market?
Seems like it. The Bitcoin ATM space is pretty fragmented, lots of small operators. Bitcoin Depot is actively trying to consolidate it, buying up smaller players to cement their top position.
And they're looking outside the U.S. now too.
They are. They deployed 200 kiosks in Australia this year. The CEO called it a global hotspot for Bitcoin adoption, shows ambition beyond just North America.
And they seem pretty adaptable on the regulatory front too. I mentioned moving machines in California because of new rules.
Right. Relocating kiosks due to new transaction limits there. That kind of agility, being able to respond to changing regulations proactively, is vital in this space. It shows they're thinking long-term, building a sustainable business.
That brings us neatly to compliance. It's maybe not the flashiest topic, but in crypto, it's absolutely critical, isn't it?
Oh, absolutely essential, especially when you're dealing with cash conversions. Bitcoin Depot seems to take it very seriously. They talk about robust multi-layer compliance procedures.
Like KYC and AML, know your customer and anti-money laundering.
Exactly. They have a dedicated compliance team, 19 people, apparently with over a century of combined experience. They use blockchain analysis tools, real-time monitoring, and they file all the required reports like CTRs and SARs.
So why is this level of compliance so, well, paramount for them?
Because it builds trust. In a sector that regulators are still figuring out, having strong compliance differentiates them. It reassures partners, regulators, and even users that they're operating legitimately and working to prevent illicit activity. It's fundamental to their license to operate, especially handling cash. Without it, the whole model is at risk.
And one final, really fascinating point from the sources, this idea that their transaction volumes are decoupled from the price of Bitcoin itself, that seems counterintuitive.
It does, doesn't it? Usually you'd expect a crypto business's volume to go up when the price is booming and down when it's crashing.
Right.
But this decoupling suggests something important about their model. It implies that their revenue isn't primarily driven by people speculating on Bitcoin's price swings.
So it's driven by the need for the service itself.
Exactly. The underlying demand for easily converting cash into Bitcoin, maybe for those remittances or online purchases we talked about, or just for basic access, that demand seems more consistent, less tied to the daily crypto market drama.
Which would make their business potentially more stable and resilient than one purely based on trading or investment.
That's the implication, yes. It
Yeah.
points towards a business built on utility and service rather than just market sentiment, a very interesting dynamic.
Okay, so let's try and summarize this deep dive. We've seen Bitcoin Depot showing really quite remarkable financial growth, driven by smart kiosk deployment, really effective cost control, that operational leverage, and building a dominant market share.
And all of that is built on a foundation of serious compliance, which is key in this industry.
Absolutely.
And maybe that leaves you, the listener, with a final thought to mull over. Considering Bitcoin Depot's success with physical kiosks and cash in our increasingly digital world, how does this model challenge or maybe complement the future of finance? And perhaps more importantly, what does it really mean for bringing more people into the digital economy, especially those who rely on cash today? Could this be a vital bridge we maybe underestimate?
Powerful questions indeed. Something to think about. Thank you for joining us on this deep dive.